In today's video, I'm going to show you how to take advantage of a sudden price dip like today. Donald Trump just said that he wants to slap the European Union with a 50% tariff. And this is no different than the tariff talks against China and the rest of the world in early April. And the people that bought the dip were rewarded handsomely because the stock market recovered and exceeded like crazy. And in today's video, I'm going to be talking about a play called MSTU. And MSTU is a 2x leverage fund on MSTR. MSTR is a Bitcoin holding company and leveraged play against Bitcoin. This play was not available yesterday. This play is available today because of the sudden drop in price because of this news. And you want to take advantage of the moment as an options seller. You don't really care where the price goes as long as it's not in the money by expiration. But before I show you the screen, I'm not a financial advisor. This is just me showing you my journey. A retired 42-year-old who retired last year at the age of 41 years old, showing you my personal techniques. This is not advice. You shouldn't be doing what I'm doing. You should be doing your own due diligence and your own research. I'm just showing you what I do. Take a look at the screen. The play that we're going to be selling an option on is MSTU. MSTU is currently down 11% for the day, and we're going to take full advantage of this. And I was actually looking for a play because I need some income this month to pay for a vacation, and this is going to be the perfect play that I found. I was looking at it all day long. So the very first thing you want to do is, as always, go year to date and look at the low points of where this bottomed out. So the low point will be right here at $3.55. The second low point would have been here at $4, and then you have another low point here at $4.40. So approximately, I'm going to be looking, if possible, to generate 2% plus income if I can find a cash secured put at a $4 strike. Let's first look if we have the availability for the $4 strike, and then I'm going to show you all of my technical analysis. Press trade MSTU options, press sell a put, and normally I would go 4 weeks out, but I want to finish all of my contracts on the same date. All my current contracts are expiring on June 13th, so I'm going to do a 3-week out contract. May 30th is 1 week, June 6th is 2 weeks, and June 13th would have been 3 weeks. I'm still going to be looking for roughly that 2% premium if I can get it, but I'm going to expire it on June 13th. Let me explain that for a moment. Some people ask me, do you ever stack options? Do you add options to an already existing options contract, or do you stack options on an existing options play in general? And the answer is yes. I will sell more options on a specific stock if the conditions change and I see another availability, but the expiration is going to be the same expiration date. So as I'm showing you today, even though my other contracts, not for MSTU, but in general, the bulk of my contracts are expiring June 13th, because that's when my month ends, I'm still going to expire this in 3 weeks. So it's going to be a 3-week play instead of a 4-week play. Why? So that I can easily manage the position, because I manage over 1,000 contracts at a time. Now we're going to look for $4 mark. So the first thing I want to do is find something that says $4. So I have a $4.50 and I have a $4. If I click on the $4, and I want to show you something very interesting, because you're going to see 10 cents and 10 cents, but you're going to see a $4.50 and you're going to see a $4. Click on the $4 one, and the first thing I want you to do is go to delta. The delta is currently 0.05. So the delta is actually less than a 1 delta. And the chances of profiting right here is 88.48%. Really, really, really good in your favor. Let's take a calculator. Let's take 100 divided by 4 equals times 0.10. So this checks out. So based on the preliminary technicals, I want to be at $4. If I'm doing the math for the $4, I am well below my 20 delta. I am well above my 80% chances of winning. I'm getting my 10 cents, which comes out to 2.5%. Now, you're going to see two things over here. You're going to see a 450 at 10 cents, and you're going to see a $4 at 10 cents. Now, the 450 is nearly the same information, right? The delta is 0.06 instead of 0.05, 88.35 instead of 88.46, and they're both offering 10 cents. Why? On this one, there's a bid, 5 cents, and people are asking 15 cents. The midpoint is 10 cents, which is what I'm going to be asking for. You have the same exact thing here, where you have people bidding 5 cents, people are asking for 15 cents, and the midpoint is going to be 10 cents, which is what I'm going to be asking for. 450 would be an okay play. $4 is a slam dunk play, in my personal opinion. Now, the variations over here can vary for different reasons. Because there's whole numbers, this would actually be somewhere like 11 cents, and this might be 10 cents, right? Or this might be 9 cents, and this is like 11 cents. But because it can only do whole numbers in this specific stock, you can't do 9 cents or 8 cents. It's showing you the midpoint, and that's what we want to take advantage of. We want this right here. There is literally no point to take the $4.50 strike when you can get the same exact premium as the $4 strike. You as an option seller are looking for anomalies in the options market specifically for your stock, and they arise all the time. You can see it with this specific play where you get alpha. The alpha here is collecting the same premium for a $4 strike, lowering your strike by roughly 10, 11%, giving you an edge of 10 or 11% on the downside protection against somebody else that would be selling a $4.50 strike for the same 10 cents. It's in your favor and behooves you to know strategies like I'm showing you right now. So now let's do some technical analysis. This is my technical analysis. I use TradingView. The first thing I want to do is just go at the regular chart. This chart is showing me that the bottom line of the Bollinger Band is $5, which is showing me that $4 is well below the $5, giving me a lot of cushion. I like the $4. The 50-day moving average is at $7.20, well above the strike price of $4. I like that as well. And the 100-day moving average is at $7.82. You could see it right here on the right-hand side, green, 720. 782 is for the white line, and the white line is 100-day moving average. The green is a 50-day moving average. The yellow is a 20-day moving average, and the red line, which I don't see right here, is going to be a 200-day moving average. So between the volume, between the Bollinger Bands, between the 50-day moving average and the 100-day moving average, all below the current share price, and you have this little gap right here to fill, where the gap actually dropped from this roughly $9 mark to this $8.50. It's showing me that for everything that I'm seeing right now, a $4 strike for a 3-week play is super solid for selling cash secured puts, and you're getting 2.5% on your money for 3 weeks. Golden. Now I want to look at a few other things. This is the RSI. The RSI is not overbought, but you have a lot of room to go to the bottom for oversold. So it can drop more. I just don't think it's going to drop to $4. The RSI, the purple line, crossed the RSI moving average, which is the yellow line, which is bearish, which means it's no longer on a bullish trend. That's okay. We don't mind bearish. We just don't want to get bearish of 50% in value. And then you have the stochastic. I still can't pronounce it. People are giving me the words. It's all good. You see that this is now being oversold. It looks like it's oversold, where the green line and soon the moving average, which is the orange line, is going to be below the 20-day. The orange line was crossed by the green line right here, which is bearish. However, I have a feeling that tomorrow or so, the green line is going to pop back up over here and cross the orange line that's going to meet it a little bit lower. Again, I don't care about bullish. I don't care about bearish. I care about super bearish, that it doesn't lose 50% value. I think I'll be okay. TU follows MicroStrategy, and MicroStrategy follows, to a certain degree, Bitcoin. Now I want to look at a Bitcoin chart, the technicals. Why? Because MSTU is based on MicroStrategy and MicroStrategy is based on Bitcoin. Because if Bitcoin stays steady, that means that MicroStrategy is not going to lose 25% value. And for MSTU to lose 50% value, where my strike is right now, MicroStrategy would need to lose 25% because it's a 2x leveraged fund. So if the underlying principle of Bitcoin is strong, this is a very strong cash secured put. Let's go over the technicals of Bitcoin. I'm going to use the same exact chart, TradingView. Right now, Bitcoin is at the top of the Bollinger Bands, giving it a lot of room to grow. And the worst case scenario right here is it goes down to $89,000. And I'll do some math after this. And before the $89,000, you have a 100-day moving average right here, which is at the white line, which is, you can see the numbers right here correlating to these numbers right here. Here, I'll move it closer. You see the 100-day moving average at 90,800. You see the 200-day moving average at 93,600. You see the 50-day moving average at 94,000. You see crazy volume right here at 94,000. Crazy volume right here at 96,000. Absolutely berserk volume at 103,000. And then you have a 20-day moving average at $103,000, showing me that Bitcoin is absolutely massively strong, exactly where it is right here. And actually, after Trump spoke, it did better than most of the other stocks. We're now going to the RSI. The RSI right now is super strong. It's overbought right now, where the purple line is crossing the yellow line, showing a bearish divergence in a bullish trend. And that's okay, because we have a lot of room to drop if we needed it. Like I said, if you look at this chart, we're right here at around that 111,000 mark. We have tons of room and tons of indicators and tons of floors, all the way dropping to $90,000. And if you go to the oscillator, static, whatever, same thing. We are overbought. The green line past the orange line. This is a bearish divergence in a bullish uptrend. And as you can see, we've been here for a while, since like mid-April. So I'm feeling very, very confident that there's some strength here in Bitcoin. Now, let's do some math. If right now MSTU is trading at $8 and I want to strike a $4, that's a decrease of 50%. In order for me to have a decrease of 50%, that means the MicroStrategy needs to drop 25%, which means Bitcoin needs to drop roughly somewhere in between 15% and 25%. So if you take 111,000, which is where Bitcoin is right now, and you times it by, let's do 0.75. That means that if Bitcoin drops 25%, that's $82,500. And it's showing me right now that Bitcoin's drop should stay above $89,000. Should. The key word is should. If it's going to stay or not is a different story. So for everything that I just explained right now, that there's a sudden drop in price, the technicals work for MSTU. The technicals work for Bitcoin, which is the underlying MSTU. The numbers work. You're getting your 2%, 2.5% in this case, not in 4 weeks, but in 3 weeks. Your delta is less than 1, forget about less than 2, and you have a 90% in your favor that this trade is going to work. I feel like this is absolutely solid. The last thing that I wanted to show you is over the last month, MSTU is only up 14%. If you go to IBIT, which is essentially the ETF for Bitcoin, over the last month, it's up 18%, which means that MSTR and MSTR proxies are actually falling behind Bitcoin. Why? Because of Michael Saylor's aggressive ATMs. Eventually, the price should catch up to a small degree, so you're giving yourself a little bit more protection from the downside. So for everything that I just mentioned, and I could be wrong, I'm just giving you my train of thought, This $4 strike on MSTU, if it gets filled, is a crazy good cash secured put, in my personal opinion. And you've been following this channel, click on the link up above for this video where I managed a $255,000 underwater MSTU position for several months at a $7 strike. And I was calm as a cucumber, cool as winter night. Let's go back to MSTU. Let's do the trade. Press trade options, sell a put, go to June 13th, go to the $4, click on this little plus, press continue. I'm going to do 200 contracts. 200 contracts is the most you could do at one single shot in Robinhood. And as you can see, I am putting up $80,000 for this play. $78,000 is collateral. $2,000 is the premium that I'm going to collect right now. This is the premium that I'm collecting right now. So as long as in 3 weeks, the price is going to be above $3.90, God willing, above $4, then I'm good. Nothing happens. I collect my premium. I am all good. Not a problem. I'm going to probably smack more than 200 of these because I want to pay for my vacation. And if I'm going to be underwater, that's okay because I think that we're going to have a recovery in the future. And I think I'll be okay with this play. Let's press review the order. Let's press submit. And then press done. And as you can see, because I had a big order and I'm asking for 10 cents, all of a sudden this went down to 8 cents, which means that my order is the biggest order right here, and I'm asking for 10 cents. People are willing to spend 5 cents. All of a sudden, that big order that people were asking 15 cents is no longer there. So I am making my own market right now. I'm the only one asking for 200 contracts at 10 cents. It's not filled yet. So I'm going to be watching all day long, and hopefully this is going to get filled. And to be quite honest with you, I'm going to end up selling another 200 of these. So I'm actually going to sell 400 of these. So I'm going to go back to MSTU. I'm going to press trade options. I'm going to sell a put. I'm going to go back to the same date. And then I'm going to stack this. And I'm going to say that I want, guess what? I want another 200 at, and this is what happens. You can make your own market. This is going to end up changing in a moment or so where you're going to see 400 at 10 cents, and I am the market right now. And people either will pay for this or they won't pay for this. But as the price is dropping right now, it's down 12%. It was down 10% when I started doing the trade and 8% when I started looking at this. There's a huge possibility that this is going to end up going through. This is going to end up going through, and I will end up collecting my money. At the end of the day, this actually closed. It actually went through. I collected my $4,000 on 400 contracts at a $4 strike, putting up $160,000 of collateral on this play, which is much better than somebody that would have to put up $180,000 collateral for the same $4,000 in premium, but a $4.50 strike. I waited a little bit, and as I'm editing this video, this trade actually ended up going through. Make sure you find your alpha as an options seller. And if you have any questions, click on these videos right here, how I manage a $655,000 underwater play with SoFi, and this one right here, how to manage a $5,000 small SoFi selling options account. I'll see you guys in the next one.